Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, going to do a little Saturday morning sunrise standing technical analysis. Everything closed bullish. Everything that we're about to look at is a very bullish Friday aside from VIX. But SPY daily bull flag, we were watching the hourly equilibrium, including extended hours, and that was in the video yesterday, or I should say on Thursday night. So we had the low of the pullback, the high of the bounce with the double top, our higher low. We did end up breaking that support level, but only by 5 pennies. We considered that a double bottom. We got to give some wiggle room. Technical analysis is not perfect. So by a couple of pennies with no follow through for the bears, we then came up and were rejected from resistance yet again. So then we pulled back, and it ended up being a bit of a cup and handle pattern with the left side of resistance, healthy consolidation, the right side unable to break it, bull flag of consolidation, very low bear volume, and then a breakout. And when that break occurred on the shorter term time frame, you could see just everything getting triggered in terms of a volume spike, stop buys being triggered, shorts being triggered to cover, and then look at the perfect back test. Previous resistance, now support, 5-minute bull flag, and then continuation. So a great end of the week for the bulls, the highest close of the S&P 500 in 2019, and we're not at the all-time high yet. Again, we want to use SPX because it does not have the dividend distribution, and it's the highest close, but we have not broken 240 yet, and that resistance, the all-time high, is 29.40, 92 cents. So we just need a little bit more follow-through, $1 more or so, but obviously the bulls are very comfortable with where we stand. There is no sign of the bears anywhere. When we do top out of this pattern, we do have to be cautious because the pullbacks are swift and they come out of nowhere. So I don't expect any kind of major dump, but we just have to be cautious that when things are this extended, have a game plan that if we do see quick weakness with notable bear volume, what is the game plan? Having that game plan is a good idea. Fighting against the trend is not a good idea. IWM on the daily time frame, we had the hourly pattern break bullish here as well with the higher low and then the bull break to a higher high. So the hourly trend change told us our daily higher low was set, and now we are seeing can the bulls break 158.69 on Monday to see continuation of this daily pattern. And then 159.50 is the highest price we've seen in 2019. QQQ, daily bull flag trying to play out. Again, this move has just been so slow and steady and just consistent gains. Anything on the daily above 186.29 is a higher low. We bounced off that level, highest close of 2019, and we're looking up at 191.22 all-time high test potentially Monday. Most of the tech sector names earnings have gone through now. We still have, I believe it's Apple and Google that we're waiting on for the major names. Financial sector breaking out. Beautiful follow through. High of 2019. Next resistance level looking up at 28.14. And the biotech sector. So the daily higher low is set on XBI, but we have not broken 87.43 for a higher high yet. And over the last 3 days, it's been very clear that the healthcare sector is significantly stronger on this bounce than the biotech sector. And that makes sense, just in the sense that the healthcare sector was the target specifically of this weakness, of this political headlines, I should say, that led to that weakness, or I should say magnified that weakness. You get what I'm saying, but the bottom line is the bounce is much more significant for XLV. So XLV is seeing big time follow through, but we are going to look for an equilibrium to set up on this scenario. And I'm looking at it from this level of 91.03. So we are going to be looking for a lower high compared to 91.03. If you've been watching these videos over the last couple of weeks, we speculated that the fact that SPY was holding up so well in this sector weakness, with this sector being the second largest holding in the S&P 500, we knew an oversold bounce was coming. It was just a question of when. And when that bounce came, we were speculating that if SPY is going to hold up fine while it's dumping, it's going to propel SPY towards that all-time high when that bounce gets going. That being said, this consolidation, if we do reject and form a lower high and then have to pull back and form a higher low, that might lead to S&P 500 consolidation. Obviously, depends on what the financial sector and the tech sector are doing, but I am paying way more attention to the healthcare and biotech sectors as far as their influences on the S&P 500 over the last 2 weeks ever since this high volatility started kicking in. So we will look for the same thing on XBI. We're going to look for a lower high compared to 93.14. But as far as clarity of the pattern, I believe it will be more clear on XLV, because when you get more extended in both directions, more extended to the downside, more extended on the bounce, that's when the equilibrium likes to do its thing and continue to tighten up. So VIX here is holding up pretty well, in all honesty, and it's not a direct inverse correlation to the S&P 500. A lot of people think that if the S&P 500 has a green day, that means that the volatility index has to have a red day. It's not the case. And just as a comparison, if we were going to look where we closed on Friday, it's pretty much where we closed on April 17th, difference of 10 cents here. And if we look at where we closed on SPY, or on the S&P 500, let's look at SPY. April, what was it, 17th? So we closed at 289.45, and here we are $4 higher. So about 1.3% higher than where we stood, yet the volatility index is in the same place. So that tells me potentially that there is still some hedging going on. If you have a long-term portfolio, some people like to hedge with the volatility index, and the fact that we've seen so much strength so recently may be keeping people a bit cautious. And again, it's always important to either have a hedge strategy or an exit game plan for bullish positions, because we know how extended we are, but that's no reason to not be partying with the bulls. Hope you had a good day. Hope you have a good weekend. We'll continue to check in, do some good things out there. See you soon.